Neil, it's also interesting to see senior White House officials really urging the OPEC Plus group to do the needful when it comes to easing supply. Of course, they're worried about fuel prices stateside and rising energy costs around the world. Do you think OPEC Plus is going to respond favorably this week? Big meeting coming up on Thursday.
Yeah, I think it's unlikely that we're going to see a change in OPEC policy from what exists at the moment. So OPEC Plus's plan is to put, 400,000 barrels of additional crude onto the market each month over the next 14 months, so that we see the complete unwinding of the cuts that had been put in place. And so I think OPEC Plus are going to keep that policy, as is, unless we see oil prices, break out significantly to the upside. I think you're right in the sense that, oil prices are now, back above $80 a barrel. If you look at energy costs, coal, oil and gas together, they make up about 7% of global GDP. Now, a year ago, that was about 2% of GDP. So high energy prices, certainly a big headwind on the global economy. And if we did see, as I said, prices moving significantly higher, above $100 a barrel, then I think OPEC Plus would take steps. As it stands today, I think they'll be quite happy with, where prices are.
Okay, so help me understand what maintaining the status quo would actually mean from a market pricing perspective. Does that increase the risk of 100 USD oil if we did indeed see OPEC Plus staying the course this week?
Well, I don't think we will see $100 plus, certainly not in the short term. And the reason for that is, if you look at the projected increases from OPEC Plus, let's say over the next 14 months, you're going to see 4 or 5 million barrels of oil added back onto the market. Now, of course, demand is going to increase from current levels. But we expect that increase to be only about 2 or 3 million barrels a day. And then, of course, you've got the possibility of Iran, coming back to the market, sometime next year. And so I think, in terms of physical supply-demand balances, 2022, looks pretty well balanced. Indeed, there could be a risk of a slight oversupply. I think the problems are really, once we get into 2023 and beyond, once OPEC has really unwound, the production cuts, the underinvestment that we're seeing outside of OPEC, is going to lead to a much tighter oil market in the future. And I think from 2023 onwards, I think that's really when we'll see, the risk of substantially higher prices.
Indeed, there's certainly a lot at stake. Look, Neil, before we let you go, also wanted to ask you about what's happening with Ramco. Shares near record highs, best earnings quarter since IPO. Is this as good as it gets?
I think in the short term, it could well be. The recovery in oil prices certainly this year has been, spectacular. What we're seeing is, Ramco now starting to raise production, which was also helping earnings and cash flow. We've also seen a very strong, couple of quarters from the downstream business on, stronger GDP. But as we come into the fourth quarter, we are seeing a slowdown certainly in China, and I think that could certainly start weighing on some of the chemical margins, refining margins. So potentially we are a high in terms of quarterly earnings for now, and so I think we'll see the stock starting to trade sideways.